Bitcoin and modern art have a lot in common. You cannot value either intrinsically because there's nothing to value. The dollar price of Bitcoin is all taste, perception, and hype. Even Warren Buffett and Charlie Munger refused to swing at this pitch. Here are some arguments against the price of Bitcoin. Again, I'm not talking about the blockchain or the need for end-to-end transactional security. I'm talking about the actual coin or any of these coins. There is no intrinsic value. Just like modern art, let's take a blank canvas with a red dot, might sell for millions. Why? It's not because of tangible value, it's because people agree it has value. Bitcoin works the same way. The price is based on belief, not fundamentals. There's no cash flows, no dividends, no business behind it. Now, $107,000 is the price today of that, just the same way that a modern art canvas with nothing on it, with a banana, might sell for $6 million. That's true, but the cash flows from that investment will only come when somebody else wants to pay you. And you cannot be certain that the banana on the canvas or the Bitcoin in your wallet will have any value higher than what you paid. Here's why I've avoided it. Besides the fact that it has no intrinsic value, and I can't own anything that I don't ascribe intrinsic value to unless I'm buying art or something pleasurable. But that's neither here nor there. Buffett has a concept of no called strikes. Warren Buffett says investing is like baseball with no called strikes. You can watch pitch after pitch, and the only swing has to happen when you understand the value. Buffett, to date, has not swung at Bitcoin. Why? Because, as he said, there's nothing to value. It's speculation, pure and simple. Charlie Munger, who passed away late last year, goes even further with his signature brutal honesty. He called Bitcoin rat poison squared. Why? Because it has no utility, no cash flow, no real world use. It's not an investment, it's a gamble. I want to give you a parallel. If you remember the failure of NFTs, just a couple of years ago, NFTs promised digital uniqueness. Most collapsed. Why? Because rarity doesn't necessarily create value. The same could happen to any of the coins that you've made money on or that you've put money into. Scarcity alone doesn't make something valuable. Utility does. Another thing to consider is that Bitcoin itself is not blockchain. Let's be clear on this. Bitcoin is not blockchain. Blockchain has real-world applications, tracking supply chains, payments. Bitcoin is just really another fiat currency, a very popular one. Its value, just like fiat currency, comes from faith, just like dollars or art. Let's talk about some of the historical crashes that have occurred. It doesn't hold up during market crashes. During March 2020, stocks dropped, Bitcoin fell 55%. In the 2021 tech sell-off, NASDAQ fell 10%, Bitcoin dropped 40%. In May of 2022, you had a 38% plunge in the broader market. Bitcoin actually collapsed. 38% plunge in Bitcoin during the broader market drawdown in May. Really doesn't hedge, it mirrors risk assets. Now, Bitcoin is not worthless. Picasso paintings are not worthless. They're just impossible to value. Like modern art, its worth depends on taste and hype. The question is, how long can this hype last? And as Buffett says, if you don't understand it, don't swing.